Welcome back to Morning Markets on Wednesday, the 26th of January. On screen, we can see the key market moves from yesterday. The key takeaways were in the UK and Europe. Positive returns were made on the day, reversing some of the drawdown experienced through Monday and Tuesday's trading session. In the US, indices were challenged, particularly those stocks trading on higher valuations at this point. And there was some volatility within the bond market. However, by close, the yield on 10-year US Treasury bonds was relatively unchanged at 1.77%. UK and European bond yields did push out at the margin. Just in terms of the reasons for some of the moves which we're seeing in the US, those stocks which are trading on richer valuations were challenged following the softer earnings reports from tech providers in the States, such as Microsoft, which we had yesterday. This is one of the first of the large technology companies in the States to report for the season, which is results of that fourth quarter of 2021. Therefore, it is closely observed. Whilst headline growth figures were positive, the group reports did suggest that some of the incredible growth momentum which we are seeing in their cloud computing-based services via Azure has started to moderate. But just for some context here, market expectations at this point are for 50% quarter-on-quarter growth there. They missed that expectation by 4%, so still an incredible level of growth. If we look at earnings actually exceeded the growth expectations, which at this stage are around 20% set by analysts. So you're seeing strong revenue growth and strong earnings growth, but a very slight miss there just in terms of the cloud-based computer service side of things. Another factor within markets is the ongoing saber rattling between Russia and Ukraine at this point, but the main focus for today will be the meeting of the US Federal Reserve. So today is the final part of the two-day meetings which they will hold in January, and we'll get a refresh of their plans for the direction of monetary policy in terms of their plans for the continuation of the wind down of the quantitative easing program, which was really ramped up in 2020, the beginning of raising interest rates and the tapering of their balance sheet. In December, they guided to 3 interest rate hikes for 2022, commencing in March. These are 0.25% interest rate hikes, taking them from zero bounds. At this point, the market is expecting around 5 interest rate hikes, so they've really pulled forward the hike expectations given the inflation backdrop. Higher interest rates increase financing costs for businesses, and especially those businesses which are more sensitive to earnings and growth expectations, those more expensive stocks within the US market. However, for context here, we're talking about interest rate hikes of 0.25% moving from zero bounds. So we're talking about incremental moves from a very low base. Financial conditions at this stage do remain supportive. The way in which the Fed communicate their plans today will be very important. From a data perspective, we're going to turn across to Europe and look at some of the sentiment indices which were coming out of Germany yesterday. Sentiment across German companies has brightened at the beginning of the year. The IFO Business Climate Index rose to 95.7 points in January from 94.8 points in December. So whilst companies are recognizing some of the challenges which they currently face in terms of the supply chain issues, they do see this improving significantly as we move through the year. So German companies are starting the year with a great deal of optimism. If we think about the manufacturing side, one of the key benefits there was you're seeing the supply chain challenges of raw materials and components easing. So capacity utilization, which is the proportion in which companies are using all of their resources, actually increased from 84.9 to 85.6%. So that's improving that imbalance which we've seen between demand outstripping supply. We are making progress there in terms of supply chains. The service side, you're also seeing sentiment improving there. So you had sentiment which was coming down slightly for the final quarter of 2021. We've seen an improvement there. And on the construction side, similar to the manufacturing, you're seeing those supply chain issues starting to ease. Materials are easier to get a hold of, allowing for an improvement in optimism within the construction sector. So just to bring some balance there in terms of what we're seeing of the market backdrop and some of the strong economic data coming through. Tomorrow we'll be bringing you up to date on the decision of the Federal Reserve, and we look forward to seeing you here on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.